Hello traders, Jason here with swinghigh.com. It is Tuesday, February 22nd, 2011, and I'm going to review a recent trade I made in WRES. Back in October, this guy was on my watch list based on its fundamentals and small cap valuation. Just the fact that it was poised for growth, and I like to trade those kinds of stocks long. And back in October, what we had was some relative strength to the S&P going on. Let's go back to this is the S&P right here, and this is WRES. So it had been moving faster than the S&P at that time, which was something I like to see. Between October and November, we had a bull flag or even a falling wedge form on WRES. And I'm going to go back to the S&P. And you can see that during that time, the S&P actually did spike up, but then pulled back. So the S&P was pretty much flat while WRES pulled back. And then in late November, on November 24th, I took this breakout right here. Significant increase in volume, breakout of this falling wedge or bull flag formation. That was my initial trade. My first tier was in there. Quickly it rode up and put in a swing high. My initial stop was just under the formation at around 397, which was also just under the $4 mark, which I considered a psychological support area. And while that was a fairly wide stop, about 10%, I just managed my share size to make sure that I was risking what I'm used to risking on an initial entry. So what happened is we got a swing high and then a pullback just around to that $4 support area. Never tagged my stop, which was great. And then from there, it made a swing high, or not really a swing high, but a swing low here, and then a nice little pullback. I actually entered more into the position on January 10th or 11th on that confirmed pullback buy scenario. And when I added more, I moved my stop up. But my stop at the time was probably 420. It quickly ran very far, even tagged the $6 mark, which at the time was sweet to see. And when that happened, I moved my stop up to a break-even point. And what happened was we got these nice swing highs and swing lows, moving higher, and the WRS formed a rising wedge formation, which is bearish. And at the time, my stop was just above break even, like I said. But then we got a breakdown of this rising wedge. Now I'm in a situation reviewing this trade where I wonder if it's better to take my exit here at the breakdown of this rising wedge than to just let it come down and stop me out. Because actually it broke down and then gapped down very hard the next day. It could have gapped through my stop. You know, who's to say that it had to stop me out where I wanted? So that's something I'm thinking about right now is, should I be taking, when I have such a bearish setup on a stock that I'm in and then a confirmed breakdown, should I just take that as an exit, take profits there? I'm leaning more towards yes, especially if I'm trying to be more of a short-term trader, which I am. But I think my mentality at the time was that this was more of a trend trade, and I was just banking on the fact that it was going to be a continually higher trend. I didn't get that, but I managed my risk and ended up stopping out for maybe a slight gain, but definitely not a loss. So that's my recent trade in WRES. Thanks for being a part of swinghigh.com, and I'll talk to you later.